In this video, I will be speaking about GBP USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Starting from the monthly, what we can see is that at the moment the market is breaking above a quite strong historical structure level. In fact, this area was acting as previous support all across this zone. Then it acted as resistance after the market had broken it to the downside and retested it. However, at the moment the market is managing to break above that zone, and if the market will be successful in that, more bullish price action could be expected away from the area. Dropping down on the weekly, what do we see? Now, from a weekly perspective, we can see a completely different scenario. In fact, what we can notice is that things are getting interesting because the market is breaking away from the range that it currently previously had created here on the weekly time frame. In fact, we had the top of the range, which was acting as resistance, which is currently getting broken to the upside, and the bottom of the range was here, which was acting as support. Now, as the market is breaking above that zone, we could expect more bullish price action to be created as the market breaks the range. Going down on the daily, what do we see now? From a daily perspective, things are interesting as well because the market has now created a new daily higher high, breaking above this previous high, which is previous resistance, now turned support. We can also notice that in general, if you have an impulse and you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market is currently testing that zone, which is in between the 0.32 and 50% of the Fibonacci taken on this daily impulse, which are a quite strong area of support that we could expect the market to potentially test and then to reject. So as the market broke above the level, if the market will go and retest this previous resistance turn support, we could expect a potential rejection to the upside away from the area. So if the market will go for a retest, how we could be approaching a potential rejection to the upside. Now, as usual, trading is reactive and not predictive, the monthly, weekly. Those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.